about 30 minutes. So thank you very much. And you can begin when you're ready.
All right, well, let me endeavor to share my screen and welcome everybody. So first off, let me apologize. I'm fighting a little bit of a cold. So if I mute myself so I can cough, please be patient. I'll be back momentarily. So let's talk about taxes and getting ready for taxes. I am so excited to be here today to talk about things before we have to file taxes, because it's really an opportunity for you to get ready and to make sure, maybe we can't change it so that there is no bad news, but we can at least make sure you know what's coming down the pipeline and you're ready to go. So with that, let's get started here. All right, so I'm going to just give a quick introduction, talk about the US tax system. So my assumption is that you are all fellowship recipients, that some of you are international students, but some of you are not international students, that you are US citizens or permanent residents or US nationals. We're going to talk about fellowship income because there's some interesting, unique things about that. And then we're going to talk about getting ready for taxes. We'll just talk really, really briefly about like what to do when the time comes. And then I'm going to do a demonstration of the IRS withholding estimator. And there will be time for Q&A. So I'm going to ask that if you do have questions, you can put them in the chat. I will try to respond to them if they are relevant to everybody. But we will ask for any verbal questions to wait until the end. And if the question resolves about something else that we're going to talk about later, I will kind of skip over it and come back to it then. All right, so let's talk about taxes. All right, so first off, just a quick introduction. So there are two organizations that help students at the University of Minnesota with their taxes. So I'm the executive director of North, which is the non-resident tax help group. We're a 501c3. I am a Carlson alum as well, and I've been a tax volunteer for 16 years. And we partner with NRVTAP, which is a Twin Cities student organization, to basically help everyone file their taxes. We started off only doing international students, but now we help everybody. So if you've got a U of M email, we would love to talk to you about doing your taxes. We are recruiting for volunteers right now, and we do provide extensive training. So if you don't know anything about taxes, but this sounds interesting or you'd like to know more for your own benefit, please feel free to reach out to us. We'd be happy to talk to you about that and have you volunteer with us. As a reminder, this is where we're doing taxes. We have a disclaimer. So this is for educational purposes, not specific tax advice, not meant to be used as a standalone document. It's accompanying an oral presentation. Tax laws do change. So what I say today may not be applicable when it comes time to file your tax return. Usually the changes are pretty minor, but every now and then the government throws us a big surprise. All right, let's talk about taxes here. So first off, let's just start with the basics. So taxes are done on a calendar year basis. It's not based on a specific job or a specific income document that you might receive. It's basically everything from January 1st to December 31st for 2023. And this is an income tax, so it's money that's coming into you. Some types of income are not taxed, but many of them are. And it's a progressive tax. So the more you earn, the more tax you pay. It starts at 10% and goes up from there. And the income tax system has been around for over 100 years. And you can imagine the government has been making rules on it for that entire time. So there are many, many special rules and exemptions and adjustments that all depend on your personal situation. And so that's why it's very not necessarily straightforward when we say, well, how much do I owe for taxes? The big answer is it depends on a lot of things. But one thing to know is that taxes for when you purchase items are a sales tax. So those are different. Those are charged when you buy something, and generally there is no refund for those. So this is only income tax, so money coming into you. So as a reminder, so the US tax system is an individual responsibility system. So it's everyone's responsibility to file and pay their taxes. They want you to pay as you get your money throughout the year. If you don't pay enough during the course of the year, they will charge you a little bit of interest or penalties since they wanted that money earlier. When you work for somebody or somebody gives you money, they may withhold or take some of that money and send it straight to the tax authorities. They will only do this when they're required to do so by law, and there are various rules that determine amounts, and it's always an estimate. It's never going to be the exact amount of tax that you owe. It's always just an estimate based on whatever rules and tables are existing. Sometimes you can give people some guidance about how much to withhold, and you can always send in extra money yourself. And those are the things we're going to talk about here later on. At the end of the year, you have to complete the forms to determine your actual tax liability. and then you send them in either electronically or through the mail to tell the IRS and the state government what you've calculated and how much tax you owe. And you may need to do this even if you don't owe any taxes, even if you don't get any money back. And ultimately, every taxpayer is responsible for the information on your tax returns. So very important to do it and to do it right. So a partial list of the things that affect your income taxes. So tax residency, marital status, your income, how much income, and then also what type. Is it wages or scholarships? Where does the money come from? Is it from here in the US? Is it from outside? And then how you spend your money also affects your taxes as well. Do you support anyone? Do you have children? Do you have parents that you support or people you live with? Are you paying back loans for things like a mortgage or a student loan? What taxes do you pay to other government units? And what qualified education expenses do you have? And of those things, I'm going to talk in particular today about tax residency, scholarships and fellowships, of course, and then qualified education expenses. So tax residency. So first off, let me say that tax residency is very different than immigration residency. And so for tax residency, if you're a US citizen, you are a US tax resident. The IRS term is alien for anybody that is not a citizen of the United States, either through birth or naturalization. A resident alien is generally taxed like a US citizen, but there may be some treaty benefits. But they do have to pay tax on their worldwide income, right? The United States government wants their share of every dollar that's coming into all of their citizens. A non-resident alien is subject to special rules. There are limits on the deductions and credits, but you only have to pay tax on your US income. So if there's money from outside the US, we just pretend that doesn't exist. So let's talk about who is a non-resident alien. So that's somebody that doesn't have a green card, has not passed a substantial presence test. And this test determines residency, and it's done every year. I'm not going to go through the math. You can see it right here. But you should know that some individuals are exempt from this test, which is generally students, so F or J students for the first 5 years they're in the US, or J1 teachers, researchers, scholars for the first 2 out of the past 6 years. Permanent residents are resident aliens. They are resident aliens. If you do pass that substantial presence test, that does make you a resident alien. If you're part year resident, part year non-resident, that's called a dual status alien. I know it's getting very complicated. And there are choices to be treated as a resident if you are a dual status alien and you're married to somebody. So what does all of that mean? It's very complicated, but the good news is, well, here's the exemptions, but I'm going to jump over here. We have a tool for you that can help you determine what your federal tax residency status is. So you don't need to know any of those things. All you need to know is your visa and your travel history. You can always get your travel history from the I-94 page, and it basically does all the work for you to count all of your days, help determine if you need to file some particular forms, and let you know what your information is. So it's a very helpful tool. The link to it is right here. Please feel free to use it. You're welcome to do that. It's out there. It's free for everyone to use. And if you are not a US tax resident, you're going to be a tax resident of a different country. And that's going to generally be the country that you lived in before you came to the US. Usually this is also the country that you were a citizen of. It's where you grew up. But it can be different if you were, for example, working in another country for a few years before coming here for a graduate degree. Usually, if you've been in another country for at least 6 months, you will become a tax resident. Now, tax, not immigration, tax resident only of that different country. But there are other factors that we can look at if those would apply. All right, so what are the effects of tax residency? Why did I start off talking about this? All right, and the reason why is that the income is treated differently based on your US tax residency. Generally, you can say if you're a US tax resident, everything is going to be taxed except for gifts, right? If somebody gives you money and it's a bona fide gift, then that is not taxed. But generally, any kind of wages or investment income or business income, those are all going to be taxed, and it can get pretty complicated. Scholarships and fellowships, if they are qualified, which we'll talk about in a moment, those are actually not taxed, but otherwise they're taxed. And we'll talk about that, I said, more in detail. For non-resident aliens, generally, you're only going to be taxed on money that is related to your US presence here in the United States. So if you are working as an employee in the United States, you will get taxed on your wages. If you worked in your home country, you're not going to get taxed on those wages. If you have investment income, that can get very complicated, but generally it will be taxed at 30% if it's based here in the United States. Business income, the same, is going to be taxed if it's in the US and very complicated. If it's for a business outside the US, then we don't care about it. We're not going to worry about it. And then the one fun thing for non-resident aliens for scholarships and fellowships, they get more options here. It's not going to be taxed if it comes from outside the US. So think of a treaty or a fellowship from your home country government or an NGO. It's not taxed if it's qualified, the same as a US tax resident. You may get a treaty benefit that may eliminate all tax on it, and otherwise it's going to be taxed. All right, so let's talk about fellowship income, because that's what we're here about. So what is exactly a fellowship or a scholarship? So a scholarship is generally an amount that's paid to for the benefit of a student. You can be an undergraduate or a graduate student at an educational institution that aids in the pursuit of their studies. And a fellowship grant is generally an amount paid for the benefit of an individual to aid in pursuit of study or research. So it's a little bit more broad in that it's not necessarily just studying, it can also be research. So these things can cover things like tuition or other fees that are paid to the school. It can include things like room, lodging, and board for meals. It can include laundry services. It can include, laboratory services, things like that. There can be a lot of things that would be included in a scholarship or fellowship grant. And it's really, all of this is generally amounts that are paid to enable you to study or to conduct your research. So how do we understand what the tax implications are of these? So starting with the best one, right? The tax-free fellowship income. So to be tax-free, you must be a candidate for a degree at an eligible educational institution, which the University of Minnesota most definitely is. The grant must not exceed your qualified educational expenses. It can't be designated for other purposes, and it can't represent payment for doing teaching, research, or other services. So qualified education expenses are things like tuition and fees that are required to enroll or attend an eligible education institution. So if you don't pay for your tuition, they're not going to let you take the classes. Unfortunately, right, if you don't pay for that TCF Bank stadium fee, they're not going to give you credit for the classes that you're taking. So that's a required fee. There's no option. You got to pay it. Course-related books, such as fees, books, or supplies that are required for the course at that eligible education institution are also qualified, but they must be required of all students in your course of instruction. So this can't be like an optional workbook that helps you and helps you do a better job, but is not actually required for enrollment in the class. Expenses that don't qualify to be tax-free or qualified education expenses are things like room and board, travel, money paid for research or clerical help, or equipment and other expenses that aren't required for enrollment. So even though you have to do research as a part of your degree, if it's not required as part of enrolling in your classes, then that would not meet the requirements to be a qualified education expense. Further, any amounts that represent payment for services, such as if you have to teach or do research, those are considered wages. Those are not a scholarship or fellowship. And generally, the U of M is very good at determining if something is a payment for services. And these rules apply to both US tax residents as well as non-resident aliens. So this rule applies to everybody. And so if the money that's given to you that meets those requirements was spent on qualified education expenses, it's a qualified or excluded grant, and it's not going to be taxable to you. Next option is if you're a non-resident alien and you're a resident of a different tax country. There are many tax treaties with different countries, and some of them have a provision for scholarship amounts, which means that even if you spent it on things that are not qualified education expenses, such as room or board, you still don't have to pay any taxes on it. So it's a really cool deal. Usually there's a set number of years that you can have when you first arrive to count that treaty. And then there's usually no limit on the amount. So whatever money you can get through your fellowship, that's no tax to you. There is a slight exception to that for the students that are from the Commonwealth of Independent States. They do have a limited amount of $10,000, and it can only be spent on living expenses. But everyone else, spend your fellowship on a spring break vacation and you still won't have to pay tax on it. All right, and then finally, if it's not tax-free, if it's not qualified, and if it's not treaty exempt, then it is going to be taxable, and you have to report it as income on your federal tax forms. All right, so let's talk about documentation for this, right? Because when you go to prepare your tax returns, you're going to need to have the information to say, well, how much money did I actually get? Generally, the IRS requires organizations to report amounts that they pay to individuals or other organizations. Usually there's like a minimum threshold where they say, okay, less than like $10, you don't have to send any paperwork, but more than $10, you have to send paperwork. It's based on the type of income and the circumstances of the individuals and the reason for the payment. And the main intent for this is to try to improve tax compliance and then simplify the administration of the tax code. So when you think about it, so if you work as an RA, you will get wages from the University of Minnesota. The University of Minnesota will report those wages to you on a W-2 form. They will also send a copy of that to the IRS. So that makes the IRS's job very easy. They say, oh, what did you send in? What did the university send in? Those should match. And if they don't, they'll send you a letter saying, match, why, what's going on? However, there is an exception to that, in that the IRS does not require the University of Minnesota or generally any grantor of a fellowship to file income or file information about that fellowship grant. So it is your responsibility to report your income and pay the correct amount of tax on that. And we're going to talk about how you can estimate that and how you can do that today. These are a list of some of the common documents that you might see. Again, I mentioned the W-2. A 1042-S is a form that reports income for non-resident aliens. So although the IRS doesn't require a US citizen to be or a US resident to get a documentation about a fellowship grant, they are required to document those for non-resident aliens. And so non-resident aliens with a fellowship or scholarship will see a 1042-S form. All right, here's some more information about what the U of M officially says about taxable graduate fellowships, scholarships, and fellowships to non-resident foreign nationals. I'm not going to really go through the details. Basically, it just says that same thing. If you are a US resident, tax resident, so a citizen or a resident alien, they're not going to document it. If you are a non-resident alien, they're going to document it to you on a form 1042-S. Here are also some additional links that are very helpful if you want to try to find out a little bit more information about your situation and what the university is doing. You can also email payroll@ohr@umn.edu. That's also very helpful, and they are usually really good at responding to questions there. All right, let's look at a few examples. So what does this actually look like? So these are examples from an actual student account, several student accounts actually. All right, so the first one is a fellowship, right? So this person received a graduate fellowship of $310. They got a refund issued of $310. So that is a fellowship that they got. It was not applied to tuition, right? They got that money back. They can go spend it on whatever they want to spend it on. The next one shows some qualified scholarship amounts, right? So we see at the very bottom that 8/6/2021, that was graduate school tuition. And then we see in those two top transactions, right? We have a non-resident tuition waiver and a general graduate PA tuition benefit, right? So those two things offset that tuition. And so it is a qualified scholarship that went straight to tuition, and that person will not have to pay any tax on that, those two benefits right there. And then this final one here at the bottom is a fellowship example, again, for an international student. So you can see here that they actually had some tax withheld, right? It was a $2,500 fellowship. There was $210 withheld, and then they got a refund of about $1,500. You'll notice like we're missing like $800, right? It should have been $2,500, and we don't see $800 here. Probably that got applied to tuition or other required fees on their account. So if this was my tax return, I would be going through that, trying to understand like where did that other roughly $800 go? All right. So if you are receiving wages or you are receiving a fellowship, you should you can be receiving that through My Pay at the University of Minnesota. And if that's the case, then you would see it through a paycheck as opposed to through the one-stop account. And you can see here, so we have two statements here on 12/28, two on 12/14. And that's because one of these is wages and one of these is a fellowship. So let's look at what these might look like in more detail. All right, so this is how a wage statement would look. So we can see that this person had regular pay. They're paid at $25.65 an hour. They work 20 hours. So they earned $513 this month. So far this year, this is how much they've earned. So just almost $22,000. And then here is the amount of tax that's taken out. Remember, I said it was just an estimate, right? But they're taking some money out every paycheck because they are required to do so. And that's what's being taken out this time, and then what's been taken out previously. If we go on to the fellowship, so this is a fellowship example for an international student. So again, fellowship scholarship is what shows in the description. You see what the quote earnings are, right? They didn't really have to earn it, but that's where they report it as the earnings. So the amount from this period and then the amount for the entire year. And like I said, so they are getting federal tax withheld on a 1042-S because the IRS requires it. So they're having $180 taken out, and they have $1,435 taken out so far. So for this individual, they will get a 1042-S, and that clue right here is the Fed 1042-S is the clue that tells me that they're going to get that. If this individual had been a U.S. citizen, they would have nothing over here. It would just be all blank. All it would do is show the fellowship scholarship and it would show the money. And so there would be no taxes taken out at all. All right, so when we get ready to file a tax return, what do we need to know about fellowship information? So we need to know the total amount of your fellowship that you received during the calendar year. Remember, it's calendar, not academic year. So it's always January 1st through December 31st. We need to know what amount, if any, of tax was withheld for federal or state. And then we need to know any amounts that were spent on qualified education expenses. This could be things that were spent on your student account or purchases or payments that you made. And those must be things that you can provide documentation for if the IRS asked. But if you received a fellowship and then you spent some of your money on qualified education expenses, you don't have to pay tax on that portion of that fellowship because it was spent on a qualified education expense. All right, so that's kind of like the introduction to the high level of it. So let's talk about trying to get ready for taxes. So let's talk about who is going to have to file a tax return. All right, if you are a US tax resident, so citizen or resident alien, it's going to depend on your filing status, your age, and your income. And here is the table. So this is the 2022 table. They have not published the 2023 table yet because laws could still change. So they usually publish it December, early January timeframe. And it'll change probably a little bit, $200. It'll go up, but not a significant change will be my expectation. If you are a non-resident alien, you have to file a tax return if you have any US source income. It doesn't matter how much money it is. There's none of this. If your income is less than this amount, you don't have to file. If you're a non-resident alien, you just have to file if you have any US income. And if you're an exempt individual, you also have to file this Form 8843, kind of independent of whether you have income or not. Our tax tool or residency tool will tell you if you have to file that form. So when you go in there, enter your visa, you can find out there if you're going to be required to file that form as well. All right, when you get ready to file your return, what are you going to need? You're going to need your income documents if they come to you, or if it's not provided, right? Like you're a US citizen and you have this fellowship, and they don't provide any documentation, your final pay statement for the end of the year will be your documentation to show how much you received. You're also going to need a tax ID number. So again, if you're a citizen, national permanent resident, you got a social security number. If you are an alien, then it depends on whether you are eligible to work. If you are eligible to work, you'll have a social security. If not, then you will get an ITIN number. So if you are a new student and you only have a fellowship or scholarship information, you should have received an email from ISSS saying, hey, we think you might need to get an ITIN. If that's the case, please feel free to reach out to us. We can help you through the process of getting an ITIN. We apply for them now, kind of now through October timeframe, so that you get that number back in time to use it to file your tax return. It can speed up your refund, any refund that you get, by like 2 to 6 months. So it's definitely the way to go to get it now if you can. All right. How much tax will you owe? I wish there was a simple answer to that question, but there is not. These are the broad tables that are used to calculate how much tax you owe. You can see kind of the rate and the income ranges, but there are also all kinds of deductions and adjustments and credits that residents have. Generally, non-resident aliens don't get those, except if you're a student from India, you can take the standard deduction. So it does get very, very complicated pretty quickly. But we can go through and we can make a kind of a few relatively simple assumptions that will let you determine or estimate how much tax is it that you're going to owe. So what we can do right now, right? We're in September, so we've got 3.5 months until the end of the year. So you can find out how much income have you received, right? You can find out how much state and federal tax has been withheld so far. And you can estimate how much income you're going to get through the rest of the year and what the state and federal taxes that will be withheld. You can also make changes now, right? Because we do not want you to owe large amounts of money when you file. The IRS will charge you some penalties and interest if you owe more than 1,000. Minnesota will charge you if you owe more than 500. And nobody wants to come up with that kind of money, let alone have to pay a little extra on top of it. And we also, don't really want you to get a huge refund if we can avoid it, right? Why should the government keep your money for 3 more months? Let's let you have that money every week or 2 weeks. So how do we go about estimating amounts? So in our fellowship example right here, right, we said the fellowship payment was $1,282 and change every 2 weeks. We'd received just $10,256 and change, I'm going to say through 9/15. There are 7 more paychecks that are going to happen this year. So that means that for the year, we would get a total of $19,230.75 approximately. We can also estimate the federal tax that's been withheld. We're going to see about $2,692 of tax withheld. And you'll notice, right? No state taxes withheld. There's nothing that says Minnesota on there. So no tax has been taken out so far. Nothing is going to be withheld in future payments. All right, we've estimated our total amounts of income and the tax withheld. And now we need to estimate the tax that we're going to owe. So if you are a US citizen or a resident alien, the best place for you to start is this IRS withholding estimator tool. So it has the ability to enter your information about your income, and it can also calculate some of the credits and dependents and adjustments that may affect your tax return. And once you do that, you can use that tool and use the Minnesota table and get a good estimate of your Minnesota tax as well. I will do a demonstration of this tool at the end. We're going to just skip over it for now, just because it takes a little bit of time. But if you're a resident or a citizen, this is your best stop. If you're a non-resident, let's see how you would go through it. All right, so we're going to assume that you are from a country that does not have a tax treaty that has a scholarship benefit. Most countries don't. We're also going to say you're not a student from India, so you don't get the standard deduction. Your total income was $19,230 and change. So if we look at what your federal tax is going to be, right, and this is not 100% guaranteed, right? This is an estimate, but this is going to be a very close estimate. We'll say, all right, when we look at that table, it was 10% for the first 11,000. And then the next bracket was 12%. So we'll say the next bracket is the 8,231, which is that remaining amount of our income. And so my total tax that I'm going to owe is $2,088. I expect to have $2,692 withheld. So I'm going to get a refund of $604. All right. Hey, that's good news, right? We don't owe any extra money. All right. We're going to do the same thing now for Minnesota. All right, again, we've got that same $19,230 of income. The Minnesota table has that 5.35% tax up till $30,000 or so. So the Minnesota tax is going to be just over $1,000. And here's where the bad news comes in, right? Because we had 0 tax withheld. And this is incredibly common for non-resident aliens because the IRS, or not the IRS, the Minnesota Department of Revenue, they do not require the university to withhold state tax on scholarship or fellowship payments. And so they don't. And so people will often can owe large amounts of tax for Minnesota. Because it's over 500, they will probably owe a little bit of penalties and interest as well. So when you get to the tax season, tax day, you are going to have to pay out $1,000 to get $600 back, but you're going to be a net $400 out. All right. So let's talk about making changes, right? So you look at this and you say, oh my God, this is terrible news. I don't want to have to pay that much money. I would like to do something now to change that. No, unfortunately, I see your message. We cannot recover those penalties because the University of Minnesota complied with all of the tax laws. They are not required to do withholding deductions for state tax. So there is no way to get the penalties back. The university doesn't do it. I know that some schools will provide a way to do that, but the University of Minnesota doesn't have a way to opt into having Minnesota tax withheld. So we're going to talk about doing estimated payments for Minnesota tax so that so it's basically paying in advance so that when you file your tax return, you don't owe a large amount. But there's no way to do that I'm aware of through the University of Minnesota. You have to do it directly with the state of Minnesota. What if the university did not make 1098 forms available to the students? So 1098 forms are very interesting. So those are a form that basically reports the amounts of tuition paid and scholarships and fellowships received. So the university is required to provide those to individuals who are U.S. residents. So that would be U.S. citizens, nationals, green card holders, and resident aliens. They are not required to file or to prepare one of those 1098 forms for non-resident aliens. The purpose of the 1098 form, 1098T, is to enable individuals to claim education credits. And non-resident aliens are not eligible for education credits. So if you're a non-resident alien, that 1098T form, even if you get it, it doesn't do anything for you because you can't use it to claim a credit, unfortunately. Okay, so we're going to talk about how to make changes. All right, so how you would make changes depends on the type of income that you're receiving. So if you are receiving wages, there is a form, it's called a W-4 form, and that basically is where you can tell your employer, the university, information about how much tax you want to have withheld. And everybody fills one of these out when you first start working. And usually you put down, like you say, like, what is your marital status? And you say, number of withholding allowances. And most people put 1, you could put 2 or 3 or 0. But if you go through this calculation and you see that you don't have enough tax withheld, what you want to do is you want to reduce the number of withholding allowances. So if you had said 2 withholding allowances, you want to make it 1 withholding. Or if you said 1 withholding, you want to make it 0 withholding. Another option, so what that does is that will change like the row in the table that they use to calculate how much tax to take out. Your other option is you can say, oh, well, I'm going to owe $700 of tax. I've got 7 more payments that are going to come. I would like them just to take an extra $100 out every month. And you can enter that and just say, this is how much money I want you to take out extra every time. And they will do that as well. A special note for non-resident aliens, you can't file a joint return, so you should always use that single or married filing separately status, not the joint status. It's just a rule of non-resident alien returns. You can't file a joint return together. And there are some special instructions, and I've got the link to those here if you want to go through those. For the state, it's going to be the same sort of process. The state has very cleverly named their form the W-4MN. And you do basically the same process. You can either just reduce your withholding allowances if you want to do that, or you can select the amount and then have them take out that additional amount. Either way will work just fine. And the advantage of this is that, you can change it again. So if you make the change and then you look at your next paycheck, you can just run through this math again really quickly and say, all right, yep, that's looking pretty good. Or ooh, no, I still need more taken out. And then you can make an adjustment that way every time. And the nice part about this is that you can, the university sends it straight to the tax authorities, right? It goes straight to the IRS or Minnesota Department of Revenue. So you don't have to worry about sending money anywhere. They do it automatically and it will get reported on your W-2. Let's see here. So we can talk about your situation offline. So if you have an individual question, I am going to encourage you to send an email, taxassistance@nrvpac.com. I've put that into the chat there. We answer tax questions there for everybody. So if you have a question, this is a personal question as opposed to one that probably applies to lots of people, feel free to email us there and we will be happy to talk to you about whatever challenge you got. Okay, so we said state has the same W4MN, you use the same process, you can adjust it, you can make it change again. If you find out that the adjustment was not enough or was too much, you can go from there. One special note for Minnesota non-resident aliens. So the Minnesota withholding tables are always based on using the standard deduction. And so almost everybody except from students from India owe Minnesota tax because of this. So even though the instructions on the Minnesota form, if you're a non-resident alien, they say you can enter a 1, we always recommend that you enter a 0 and you check the box for single, no matter whether you're married or not married. That will reduce the amount that you owe or make it so that you get a small refund on your Minnesota tax return. Is it relevant if we no longer live in the US? It depends on if you are a US citizen or permanent resident. So the IRS will tax you no matter where you live in the world if you are a US citizen or permanent resident, so if a green card holder. If you are a non-resident alien, so you're not a US citizen and you leave the United States, once you are no longer here and you no longer have any US source income and your tax residency is non-resident alien, then you don't have to file a tax return. You don't have to do anything with the IRS and the US taxes. State taxes depend. Some states will honor federal tax treaties. Minnesota does that, so we've chosen well which state we live in. Other states will not honor those treaties, like California. They do not honor the tax treaties. So whether they will or will not just depends on the particular state. All right. So let's talk about fellowship and how to make changes, right? Because that's where I expect most of you are. So for fellowships, for federal taxes. So if you are a non-resident alien, you are going to have 14% of tax automatically withheld for you, and that cannot be changed. That is a requirement by law. That is what they have to do. You can pay extra if you think you need to pay extra, but you can't pay less. You're going to just have to wait and get it back as a refund, unfortunately. If you are a US citizen or a resident alien, right, there's no automatic withholding. So you should try to make an estimated payment. And this is basically where you say, oh, yep, I know I'm going to owe taxes. I'm sending my money in. The general schedule is like every 3 months, like once a quarter. But you can do it on a different schedule if you need to. And here is some information and a link about how to make those payments. And there's all kinds of information out on the IRS website about doing that, right? They want your money. They try to make it as easy as possible for you to send it in. If for Minnesota taxes, again, everybody's kind of in the same place here, right? It doesn't matter if you're a citizen, resident alien, or non-resident alien. There is no automatic withholding of Minnesota tax for scholarships and fellowships. So you can also make an estimated payment. Here's a link to make a payment. Here's more information about those. You can do it online for both federal and state, or you can mail a check in. Either way works just fine. You just want to make sure that you keep good documentation of that payment, because when you file your taxes, you're going to tell them, I already paid $500, right? I don't have to pay that much more. I only have to pay like $100 more on my taxes now. So that's the most important thing that you can do, is understand How much tax are you going to owe? How much tax have you already paid or do you expect to pay? And if there's a big discrepancy between those two things, how do you make a change so that you can fix it? All right. I'm going to talk a little bit for just 2 seconds about what happens. So let's say we make the change, the end of the year comes, Christmas, start of the spring semester. It's time to go prepare your taxes, all right? And there's a lot of options out there for you. Kate, the answer for Minnesota taxes is slightly complicated. It depends on whether you're a non-resident alien or a resident. Generally, you're only going to have to pay Minnesota tax on Minnesota income, but there are a few circumstances where you might have to pay Minnesota tax on your full US income. And if you want to send me an email, we can go through your particular situation and understand which of those it is for you. All right, so tax preparation options, right? So I'm going to kind of walk through the various ones out there, and then I'll give you the pitch for us. So go to a tax preparer, right? It's expensive, costs more money, right? But it's super nice. They do it all for you. If there's a mistake on the return, as long as what you gave them is correct, then you can say, oh, I relied on this person, right? It's their fault. And you won't have to pay any penalties or interest. You'll still have to pay the tax, but you won't have to pay penalties or interest. So, but it's more expensive, right? It's not so great. You can buy tax software that's not as expensive, but you have to do the work, find the software, go through it. Usually you can pay extra if you want to have somebody check things out, make sure it's all good, or represent you if there are problems. You can find online free software. Sometimes they start as free, but they don't end up as free based on your income and situation. So it can be a little sketchy sometimes. Again, it's kind of a medium amount of work. Again, you can usually pay somebody for some extra support if you think you want it. Next option, go to an IRS VITA tax clinic, which is free. We say it's a little bit less work, right? We've already got the software. We've already got guides to help you prepare your tax return. And there's free tax assistance to help you review it and help you if there are problems. And then finally, you can do it yourself, right? You can go online, find the forms, download them, read the instructions, fill them out, completely free. Just definitely takes a lot of work as you figure everything out. And so I, of course, am here to say that you should do the VITA Clinic because that's the organization that we support and we help here. So we help international and resident students here at the University of Minnesota do their taxes. So we filed just under 2,000 returns last year. It was like 1,946 or something like that. And we're really excited to grow again this year. We provide free support for anybody that has a school email. It doesn't matter what your tax residency is. We do have a hard income limit of 73,000. That's a limit that's in the software. We can't change that, unfortunately. And there are some things that we can't do, like cryptocurrency. The IRS says that we can't help with that, so can't help with that one. However, if you're out of scope, often the software will work except for that income limit, but we just can't tell you, like if you do cryptocurrency, you can still use the software, but we can't tell you how to type it all in to make sure it's right. But if you have questions, please email us. We can help you and see if that works. So we won't be open to start doing taxes. So the software doesn't become available until January of 2024, usually like January 21st, 23rd, 25th, something around that time frame. It'll be all over our website, and we'll also include announcements and various newsletters that go out to the student population as well. So we would encourage you to use our site. We would love to help you with your taxes. I'm going to come back to this question. Okay, if we make early payments, you don't report them as tax withheld. You report them as estimated payments. So the tax withheld is always going to be by somebody that that is giving you the money. So because they never even send it to you. They send it directly to the tax authority. So it goes straight to the IRS or the Minnesota Department of Revenue or whatever other state. Estimated payments are when you personally send extra money in to the tax authorities. Can we do spouses if they don't have an EDU email? So we do membership based on a school email. So EDU, ORG, all kinds of other school, things like that. We won't give them like an email, but you can create an account with them, another account in the free tax software, and you can use that to file their return for free. So you can still get help for them. We only do the EDUs for tracking purposes so that we know that somebody's a school, a student, or a teacher, a researcher, et cetera, et cetera. All right, this is what we provide, basically software 24/7, all kinds of tools. You've already seen the Am I a Non-Resident Alien? We have a personalized guide, which is really cool if you're a non-resident alien. Basically, you just like answer some questions about your situation, and then it gives you like screenshot by screenshot, the PDF that walks you through doing the forms or doing the software. We have VITA certified volunteers that help at our tax clinics. So that's what I was saying for recruiting. If you would be interested in learning a little bit more to help yourself and others, that would be awesome. So we do in-person and remote tax clinics. We also do office hours and email support. So we provide a lot of assistance to help people do their taxes when the time comes. But that is 5 months off. All right, let's see if there's any other questions. No. All right, so we're going to do an example for a tax resident withholding estimation. So I already did the non-resident where we said, okay, this was our income. Here's what's been taken out. Here's what we think we're going to owe. Now we're going to walk through a resident example. All right, so we're going to do Dorothy Franklin. So Dorothy is a graduate student in chemistry. She's a US citizen. So this is her second year. So she got a fellowship for her first academic year, $25,000 for the fall 22, spring 23. So her final pay stub back in May said $13,888.89. But she had no tax withheld, right? Because she's a US citizen. Nothing was taken out, no federal, no state. She did not make any estimated payments because we didn't do this last year. She had no idea. Now that she's starting her second year, she's on a W-2, right? She's doing an RA position. She's living off campus. We're not going to really worry about that, but she's getting a W-2 for her wages. Yes, the TaxSlayer software supports property tax refunds. So if you come to us, we can help you with those if you're eligible. All right. So she doesn't have a W-2 yet. She has her wage statement. So I just kind of summarized some information here. And all right, this is an example. So this is not exactly right. But this is a way to show you what her situation would look like. Yes, the slides, actually, I'm going to share them with Noro, and then Noro will send them to everybody. So, and the recording of this presentation will also be shared to everybody as well. Okay, so Dorothy she gets paid basically $1,026 every 2 weeks. So far, she's received, through 9/15, she's received $2,052. So she's gotten paid twice. She's expecting to get 7 more payments this year. So that'll be $7,182 for a total of $92.34. Her federal tax so far is 0. They haven't taken out any money yet. So right now it's just all 0. And her state tax, she's had $30 taken out. So theoretically, 7 more payments, she'll have 105 more, total of $145 that'll be taken out. All right. And so we're going to go to this IRS website, which is here. I'm not going to do it. I'm going to bring this over right here. All right. So we're going to use that. I'm going to go, pardon me while I escape out of here. And all right. Make sure I have Dorothy's information so I can see it. There we go. All right, so we're going to use her estimator here. All right, so this is mainly for residents, US citizens and residents. All right, so let's find out about you. So Dorothy is single. All right, you have a job that withholds federal tax from your paychecks. We're going to say yes. She doesn't have any children or parents. She's not 65. She's not blind. She can't be claimed as a dependent. So none of those things apply. All right, we're going to say 2 jobs. And the reason for this is that we're going to say her first job was her fellowship. All right, we're going to call it a salary. We're going to say I had this job in the previous year. It started from January 1st. We'll say that it ended 31/2023. She earned a total of, where did it go? All right. 13889. So taxes round to whole dollars. So we're gonna just round to dollars. She had 0 tax taken out. None of these things apply. Let's talk about her second source. All right, so this is, we're gonna call it an hourly job. I currently hold this job, but only for a portion of the year. So we're gonna say 09, 01, 2023 through the end of the year. She's paid every 2 weeks, twice a month. That may not be true about how you guys get paid. I apologize if it's not. All right. She expects to earn, was it 25.56 per hour, 40 hours per pay period. All right. That's really close. All right. Yes. None of that applied. All right. Okay, so she doesn't have any other sources of income, no self-employment, no investment, nothing like that. All right. All right, there we go. All right, she doesn't have any other withholding. She hasn't made any estimated payments. So if you had made estimated payments, this would be where you could enter it. All right. Does she have any student loan interest deductions? No. Educator expenses? Nope. Right. These are all of the credits that residents get access to. If they apply, none of that stuff applies to her. She's got a pretty simple life. Standardized or itemized deductions, we're going to say standard. So you look, so the standard deduction is estimated to be $13,850. So if her only income had been that fellowship, right? She had $13,889. So basically would have been tax-free, right? She would have been okay. It would have been totally fine. But because she now has more income, she has to pay income on all of her wages from like the first dollar, basically. She's paying at least 10% on her wages if she didn't have that much taken out. So we're going to just use the standard deduction because she doesn't have things like a mortgage, large gifts to charity, or anything like that. She does not have anything like that. So we said that she was, let's say she's 27. She doesn't have any of these things here. Is there anything else? Nope. So American Opportunity Credit is for the first 4 years that you are eligible. Time learning credit, we're going to say no, just because she's already got her scholarships. So she's not going to have any eligible expenses because everything's paid for by her scholarship or fellowship. No retirement savings, none of this stuff. She doesn't buy anything. All right. Okay. So it says that you will owe $0. That's awesome. All right. So it would provide information here. So if it did tell you to do that, it would give you a W-4 form that is basically already filled out where you can put your name and all of your information in here. Like here, it's got zeros in, it's got single already selected for you. So in a situation where her income was a lot higher, we can enter that information in. All right. All right, so that's how you would go through that, and then you can adjust that as needed to change your amount of tax withheld. So you can basically go back through and go back and say, oh, I want to adjust these different things here. Oh, I want to change this. I want to change that. You can update all of the information as you need to. All right. Okay. So, and then in this case here, so I don't remember exactly what it said. I think it said something like $6,000 that her income was going to be. So if we go back to here, we would say the same thing here. Right, so if she had $6,000 of taxable income, right, we would say $6,000 here. I can't do the math quickly enough in my head. It's going to be 300 and something. 321, right? So she's had 105 taken out, right? So she owes what is that? $216. Not that bad. Okay, right? She owes a little bit of money. Maybe she would want to send some in, but she's nowhere near that $500 amount where she's going to owe a lot of money to the IRS or to the Minnesota Department of Revenue. All right. So with that, that was basically a demonstration that I was going to show you about how to use the IRS online estimator tool. I so wish Minnesota had one of those, but they don't. And so that's why we kind of did this little estimation process here to say, okay, how much does she owe? Or how much is her total income? How much tax is she going to owe? And then again, how much tax is being taken out. So with that, I'm going to stop presenting. And if there are any questions that anybody has, please go ahead and let me know. Otherwise, once those are done, we'll wrap things up here a little bit early and let everybody get out to their next things.
Am I able to ask my question through audio or do you want it typed?
Your choice. You can ask it through audio now. Go for it.
Okay. So just for that IRS estimator, like the amount I'm obviously now on the fellowship, but my payment from my assistantship is kind of variable because like last spring, it was like 20 hours, and then over the summer I work more hours, and so it's like different. Like I'm wondering, do I put those as separate jobs or do I just find a way to average it or something?
So you should be able to enter like what your year-to-date earnings are. And then you can just do the total so far for the year. And then so if we do this, let's do what's good as like salary. So you'll have it all year. Actually, we're gonna do an hourly job all year. We're paid every 2 weeks. Right. So you can basically enter like your most recent payment. So like let's say 09, 15, 2023, and then 9, 15, 2023. My paychecks vary. So then you can enter amounts and like enter a year-to-date amount. Okay.
All right, that makes sense. I figured they
Yeah.
had some way to get around that. I just like kind of need it spelled out for me. Thank you.
Yep. No, it's okay. They do, because that's very common actually. That most people don't have like the same amount exactly every week. So and you can choose. So the slides will be sent out by Noro, and you can do both, right? So the W-4 is really for wages. And you can do estimated payments, and that's money that's just sent in like straight from you to the government. So it can be for total income, wage income, fellowship income, whichever you want. So do we double check the work for tax estimation? If you lay it all out, we'll take a quick look at it, but so you should, but remember, you are the ultimate person responsible. So we will just give you a, yep, that looks pretty good. Or, no, that doesn't look quite right. So. So from my perspective, just kind of speaking as somebody that's paid taxes for a lot of years and has done this for a long time, I generally try to make it so that I am like within $100 either way of like either I get a refund of up to $100 or I owe up to $100. We're usually not going to be able to be more accurate than that when we're trying to estimate things. But, as long as you're within that $100 range, either way, I would say that's a good estimate. You should not expect that the numbers are going to work out exactly perfectly. Correct. If you're on a fellowship, you won't get a W-2. So a W-2 is for wages. So when you're working as an employee, that's like an RA or TA job. When you are required to show up, you have to do stuff. Whereas the fellowship is the academic or the grant to enable you to pursue your studying or researching. So you won't get that. And you should look at, if we go back to go back here. So if you look at your, look at the My Pay statement, right? Because wages will show up as like regular pay, and a scholarship or fellowship will show up as fellowship scholarship, coincidentally enough. So you can look at that and you should be able to see exactly what it is. And it'll be in your offer letter as well. And then if there's any questions or problems, you can always talk to payroll or talk to your department if maybe something changed. For residents on fellowship, what will we get? You will, I won't say get nothing, but so they don't provide an income document to report your fellowship income. They will provide a 1098-T that is used to claim education credits. But your best way to determine how much you got paid for your fellowship is to look at your pay statements in your final end of year statement, and it'll show the year-to-date earnings, like right here, that 10,256. No, student loans do not count towards income. So because you have to pay it back, that is not considered income. And when you pay back the loan, if you have to pay back interest as well, if you're required to pay that interest, you actually can get a deduction from your taxes based on that interest amount that you have to pay. Student loans also don't count as income for the Minnesota property tax refund as well. So
Can I ask a question over audio?
yes, go ahead.
Okay, so I just checked my pay statements and I noticed that I was a TA in the spring and then I was an RA over the summer.
Okay.
And it seems like they're cumulatively adding up my year-to-date income for both of those jobs.
Yep.
But then when I opened my most recent pay statement, it's saying my year-to-date earnings were just for that fellowship payment that I just got this week. So it does not reflect, or it's not including anything that I earned earlier this year. Is that an issue with my account that I should talk to someone about, or is that something I'm
normal.
misunderstanding?
No, it's okay. It's all right. So the reason why is that, so there are two different types of income. So working as an employee, either as an RA or a TA, you're still earning wages. And so those will be combined. So even if you change positions or you change departments, as long as it's for the University of Minnesota and you're working as an employee, they will add up all of your wage earnings and that'll get reported all in one statement, one year-to-date amount. Because fellowships are treated differently from tax perspective, those are going to get reported in a different like statement or account. And so that's why you're seeing that one show up as a new amount with no year-to-dates or little year-to-date amounts there.
Okay, that makes sense. And then to clarify, you said we get 7 more paychecks this year. I guess I could count that.
That was my quick estimate for it. I don't know
okay.
exactly what the pay date is. So
Gotcha. Okay, so I'll just calculate that myself.
yeah, I would count it
Okay.
yourself. It's going to be something like 7, probably. Could be 6, could be 8, maybe even 9. But count it yourself.
Okay, cool. Based off of the 7, I just multiplied it by 7 and it's coming out much lower than what I am supposed to, because it's supposed to be $25,000 for the year, so it should be 12,500 per semester. And just based off that quick estimate, it was coming out to about like half what it needed to be. So is that something I should follow up on myself?
Yep.
Okay.
Yep. You would need to, I would say, start with payroll.
Okay.
So ohr@umn.edu
Okay.
and follow up with them. Occasionally they'll like enter like the wrong amounts.
Okay.
It's not common, but follow up with them and see what they say. Usually it's never 50-50 because they do it kind of like per week, and there are more weeks in the spring than there are in the fall. So
awesome. Okay, thank you.
You bet. All right. Okay. So American Opportunity Credit and Lifetime Learning Credit. So they are 2 credits, education credits, that are available for U.S. tax residents. The American Opportunity Credit is a credit that is partially refundable, meaning that you can get money back even if you don't owe any tax. But it is only available for your first 4 years of post-secondary education, so after high school. So generally, there's no way that you can be a graduate student and have not already met those first 4 years of post-secondary education because you've already got your bachelor's degree. Theoretically, if you like graduate in 3 years, would you maybe have 1 year left? Possibly. That would be very unusual, but theoretically possible. All right. The lifetime learning credit is the other credit that's available. This one doesn't have that same year number limit, but it's not refundable. So it only can take your tax down to 0. It can never give you a refund. It just takes your tax away. Both of these credits are only available for amounts that you spend on education. So if your fellowship pays for all of your tuition and fees and you get some extra money, then you've never actually paid for any qualified education expenses, right? The fellowship did. The part that went to the tuition, the required fees, that was all tax-free, and then you got the taxable amount that was for living expenses. If you got, say, a partial fellowship, say you're here to get your MBA and you got a scholarship for like $10,000, which is great, but you know the tuition is like $30,000, so you had to pay $20,000. That would be a time where you got a fellowship, sure, but you're not getting everything paid for. You're still paying 20 grand in tuition. So you would have qualifying education expenses for either of those 2 education credits. Yes, there's nothing that specifies that the education has to be completed inside the United States. I believe there are some colleges outside the US that do a bachelor's degree in 3 years. So that's why I threw out the maybe not 4 years. But there's nothing that says it has to be a US school. All right, does anybody else have any other questions? Otherwise, we'll wrap it up here. Thank you. You're very welcome. Well, again, everyone, thank you so much for coming. So again, we are NRVTAP and North. We would love to see you at one of our tax clinics in the spring. We'd love to have you as a volunteer as well if you would be interested in learning more about this and helping yourself understand it and helping others as well. Have a fantastic afternoon, and we will see you again another time. Thank you.